U.S. Chamber of Commerce with the Managing Director of the IMF, Christine Lagarde. Nice to see you again.
Lovely to see you too.
Giving her preview for the IMF meetings next week and characterizing the global economy as in a delicate moment. What does that mean?
It's a delicate moment because the growth is losing momentum. And it is losing the momentum that we had hoped for pretty much across the globe. We have 70% of the global economy that is slowing down. So compared with previous forecast, it's clearly going to be a little bit downgraded. I think added to that, there are signs of hope coming up. So we forecast that 2019, second half, early 2020 should be better placed, but with clear downside risks, which have to do with country-specific cases. What will happen to Brexit? How will it impact the global economy, the UK economy, of course, and Europe? Tensions on trade, which clearly have resonated negatively on the confidence index of many economic operators, which is still up in the air. We have good noises, but nothing is yet certain. And financial markets that are a bit jittery. They are quite positive at the moment because the financials are conducive to that, but possibly at risk of a change.
Yeah, we saw how sensitive the market is lately to any piece of global data. Got some green shoots out of China manufacturing, out of U.S. manufacturing. Are you seeing any early signs that we could be looking at a bottom in terms of the worst of the global growth picture? Too early.
What we know for certain is that the upswing that we forecast for late 2019 and early 2020 will have to do with country-specific cases. When you look at countries like Iran, like Venezuela, like Turkey, hopefully out of where they are now, which is very low, we might see a positive impact. But no, unless trade tensions go away and go away for good and across the board, which would then clearly boost confidence, which would clearly encourage investment. We are very concerned about this very delicate moment where policies are needed on all fronts.
You've mentioned trade tensions going away. Last time we spoke, a few months ago, you were pretty optimistic that a deal would happen between the U.S. and China, that there was commitment to making a deal. What's your level of optimism these days?
Well, a deal is a deal is a deal, and it's only done when it is signed, sealed, and delivered, as the old-style British lawyer would say, and it is not there yet. So I'm still optimistic. It's my nature anyway, and there is a clear impetus, a clear determination on both sides to move forward, and it's vitally important, because if there was no such deal, well, clearly there would be a very negative impact on both the Chinese economy, but also the U.S. economy. We've done some modelization, and we figured, okay, if there was a 25% tariff increase on all trade between the two countries, U.S. and China, and there is a clear negative impact, minus 0.6% on the U.S. economy, minus 1.5% on the Chinese economy. So given that those are the two big giants currently, if you have that kind of negative impact on both, it would weigh heavily on the global economy and would be bad.
What would happen if we did get a trade deal, but some of the tariffs stay in place, as have been threatened?
That's for the negotiators to decide. I understand that.
But would we see upside to growth?
Well, hopefully the first thing is to have less uncertainty, number one. Because the business community can adjust, but they want to know how much, where it is, for how long. If there is a prospect that tariffs will eventually be removed over a period of time, maybe, that's already less uncertainty. If they understand that there will be respect of intellectual property and enforcement of the rules, that's less uncertainty.